The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technicians Hour. My pleasure to be here on this 11th day of April, and great programming. Try to keep that up. It's going to be a tough one. What we're looking for is what happens when the volatility index rallies as strongly as it did. And what I said to my subscribers to my opening call, here's the 120-minute chart. Here's the 120-minute chart of the Dow. But most importantly, what we want to look at is, look, here's the 120-minute chart of the volatility index. This is a section in my newsletter that I call, where is it? Whoops. Move that away. There it is. This is a section in the newsletter that I call the overview section. It's called Overview and Market Today section. Right here it is. And this is where I discuss these aspects in these five, I call them the five quadrants. This is a 120-minute Dow chart. This is a 120-minute volatility index. This is the short-term trading index, Richard Arms. I just use it for certain numbers that I'm looking at. That's all. Use it in a completely different way, I believe, to Richard Arms. I call it the Chapman Wave Trend Gauge. And here's the Dow with just a bar chart of the Dow and a bar chart of the S&P. And then I give this overview of what we're looking at. And what I discussed was this volatility index was up sharply. It closed at in the 14s. It leapfrogged over the 13s, in the 14s, and yet the Dow was up a point. The S&P was up a tad. What's with that, I said. So that says either today we have the follow-through to the downside, or there's going to be a rally as the volatility index starts to decline. But the volatility index seemed to me to be active this time, that it was alive, that it was telling us something very important. So then what comes into play is this technique that I have called the Chapman Wave 5, something I've worked on for a long time, maybe 2 years. I discuss it here only in terms of what it purports to do. It is so different from Elliott Wave that it really has, at this point, the only thing it has in common with Elliott Wave is that I look for a 5. And that's very different to the Chapman Wave articulation of the notations. What we're looking for here is a leg C that went below 20,650 in the 120-minute Dow chart. We're at 1, 2, 3, 4 was higher than 2. In the Elliott Wave, there's just no way on earth. Not only that, you could never have wave 3 to the downside, way shorter, almost half, less than half of what wave 1 was. So everything is different. So it's Chapman Wave methodology, and we finally got that C. We got that 5. At this point, we're getting close to some kind of a bounce. All right, just wanted to discuss that. The other 120-minute chart here is the one with the technicals, and there I said to subscribers that the technicals were still weak. When I say the technicals, I mean the MACD and the stochastic, and also I imply the 9-period exponential moving average had become resistance. And look, we plunged through this trend line here. It's the same chart, except now I've got the MACD and stochastic and some other technical tools. If you go to the daily chart, look what we're looking at. We're looking at an arch. Still hasn't created the arch, but what I had said was at below 20,650, there's a much greater chance that we will be going down to the 20,400. Is that 500 or 400? 20,517 low that was made on the 1st of April. But in fact, you really want to see a close below 20,412 to be able to talk about this as an arch formation, the Chapman Wave, H, lowercase h. All right, enough with that. So this is the same chart as that one. This is the daily chart. There it is. And Chapman Wave 5 in the daily only starts under 20,412. I think we will get there in this particular down move. It doesn't say when. It just says there should be a move down. The other techniques that talk about the when. All right, enough with that. Let's go to the numbers. The Dow is down. Where are we? Move this away. There we go. The Dow is down 100. at 20,557. The S&P is down 15.5 at 2,341. The comp index is down 50 at 58.31. Gold is having a fabulous day. It's up $19 at 12.73. Silver is also having a good day. It's up 31 cents at 18.23. We've got crude oil down 21 cents at 52.86. Bonds are up $1 and 5 ticks at 152.30, and gold and the dollar itself is down a little bit. Let me see, dollar's down 41 cents, a little more than a little bit, at 100.53. Now let's do the numbers now. This is the Chapman Wave 120-minute chart in the E-mini. See the arch formation? It did take out the left side low of 23.3675. So far, it's above that. You remember the rule? My rule of thumb is the left side low in an arch formation can take it out, but if it closes above it within 2 bars, sometimes I say 3, but talk about 2 bars, that is a positive and says there could be a bounce, and that bounce would take it to the next resistance level. That's way up at 23.4780. I'm not sure that that's possible right now. So the bar is still current. It's active. So let's see what happens at the end of this 120-minute period. Okay, let's get out of this 120-minute chart and let's go one step at a time. Go back to the Dow for a moment. The Dow at this particular point is hitting the 50-period exponential moving average. It's just about gone under it. It's almost about to hit Garrow's. This is called right here. Look at that. See those little dotties there? That's called the SARS, Parabolic SAR. And what it's using moving averages like all the others, except they put the dots in here. And the dot, it just stopped right at the dot, didn't break down. So if it takes out, I can just tell you right now, if the Dow takes out the low of today, sometime today, the low of 20,512, so it's underneath the 20,517 level. Whoops, that's not a phone call that I can take. Let them leave a message. Okay, so Dow down 104. 20,412 is actually our target for Chapman Wave 5, at least a target. It doesn't mean to say it's the target, it's a target. And on the resistance side, we've got 20,645. The S&P, let's do this, SPX.X right now. S&P arching over and same kind of pattern. And that says that taking out 2328 would immediately set in place a 2322 low as a target because you want to get to a leg D below that. Most importantly, let me just search over there. Most importantly, it's the weekly charts that I'm looking at that I said by this Friday, if we're looking at, let me just make that softer. There we go. By this Friday, if we're looking at the 9-period exponential moving average becoming resistance, something else is going on. One of the reasons why I mentioned all week, I've been talking about this last week and this week, that we are short the Dow, we're short the S&P, we're short the Qs, we're short the semiconductor index. This is the most shorts we've had in indexes in a long time. Maybe a little nervous when the volatility index ran up so high and the market didn't fall 112 points or more in the Dow and 15 points in the S&P, because it was really important today, because if there was a volatility index, we'll go right there now, the VIX.X, way up in the 15.59. It's gone to a leg E/, whoa, no, it's just an E. Is that an E? Yeah, it's an E. I'm not going to call it an A. I'm going to say it's probably an E. I think we're real close to some kind of a bounce. But look, the VIX index in the month in the weekly chart has gone to a leg D. Very unusual action. So we'll talk about this when we get back. Basil Chapman, Tiger Technicians out. Dow's down 110. We'll be right back.
If you're looking to unearth a new financial resource and diversify your financial portfolio, consider the new Market Safe Core Commodity CD from Everbank. This 5-year U.S. dollar-denominated CD gives you exposure to 4 equally weighted commodities: gold, copper, WTI oil, and sugar, in one powerful CD. With no pricing caps, you can potentially earn an unlimited upside payment at maturity if the commodities increase in value across semi-annual pricing dates. And should the opposite occur, your principal is 100% protected. Keep in mind, returns are based on CD performance. There's no annual percentage percentage yield or periodic rate of interest on this index CD. Don't miss out. With certain commodities on the rebound, now is the time to take advantage. The March 23rd funding deadline will be here before you know it. So call 1-855-750-4051 or visit everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. Once more, that's 1-855-750-4051 or visit everbank.com/TFNN. This advertisement is sponsored content. Everbank is a member FDIC.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Basil takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, everyone. We're back. I had a question about JNUG, which is the junior. That's an F, right? This is an A, and that's a B. All right. So what we're looking at here, yes, the 120-minute chart is still looking good. I must tell you that under these conditions, I thought about it a lot. We have some other long positions, but because the gold stocks were not acting all that well, I kind of did not go back into the gold stock. But I'm thinking that in this particular phase of the market, remember I spoke about it, who did we have? We had a call, I think it was Scott the other day they called, and I said that in my analysis, and I could be completely wrong about it, but I'm thinking that if I look at the president and I try to analyze the market, and at the back of my head, I always have some analysis going on that's kind of the bigger picture, and that it's usually a political picture. And that political picture was saying that there was a real good chance that Trump would find a lot of conflict going on in this particular period. He had a spectacular, what was it, November, December, almost all of November. So it's November, December, January, February, right into the March high. I'm thinking that, let's go to March. I'm thinking that we would see some kind of political pressure, and that would be it would unfold as a market pressure, since I had all these other indications saying that we would probably, let me just give you actual fact. The 1st of March, the speech spiked to 21,169, set in motion a peak G and a sell mode. In the S&P, it's a different. S&P made a high same day, SPX.X, and that was at 2,400. That was peak D. An alternate count, an instant restart gave you a new buy mode and went to a D. So that was saying to me that probably the political pressure and the stock market pressure together would tell me whether or not we're going to have a rotational correction, a gentle that would be a gentle rotational correction where sectors that were very good pull back, but sectors that have been very bad start to rally, and that ameliorates the sharp decline in percentage terms, or whether I was waiting for the cues to finally give me some kind of a sense of a top. Finally, we got that, and I said the only way I could get it was if the semiconductors, which led us up, start to lead us down. And look at this: semiconductors down 140, down $1.42 today at 77, round number, down 1.82%. Just the other day it was at 80.05. This is 3.5 points. This is a big deal because it's not done anything close to this in months and months and months. So it says to me that the Qs have probably made a high. Now, I'm going to answer your question. I think that because of it, that gold now could lead the gold stocks higher, which is a little unusual. At least it's been unusual for the past couple of years because you've usually had gold stocks leading gold higher. So now what I'm looking at is that gold itself is at up 20. It's making a new leg C to the upside. And that says that the 200 period moving average in the weekly chart at 1275 is probably a target. It says the monthly chart is improving. It's not great. It says that the 120-minute chart is pretty darn good. Should go a tad higher. Now, the question is the dollar. So in other words, your J-Nug, I think you've got yourself a nice, if that's what you're holding. If it's a short-term trade, I'd say, take some profits now. You can always buy it back. But if it's looking at a bigger picture, JNUG, this is the DX Junior Gold Miners Bull 3 times. So you really get impact here. It's up 6.4% at $7.30. And if you look at it, I've got a little inside A to B to C. Oh, I forgot completely. What was it that I did? And I wanted to show it as a fantastic example for my subscribers of the Chapman Wave, the quickest you can ever go to an F. Oh my goodness, am I going to forget what it is? I'll have to go through a whole bunch of charts to find it. All right, well, look at this quick, A to B to C. And that says to me that JNUG is in play, but I would rather say to you, I don't really want to get involved with the 3 times. I want to rather say to you, look at the gold, the GLD. It did kind of what we were expecting the other day. The GDX did that. It had Chapman Wave stalk leg formation. That's the GDX is the gold miners. It went leg A, B, made an oval pattern for the body. It went to the neck, went to the head, and then it broke down and retested the body. So now the move up right now, I'm calling it an E, but it's something else. It means that after you've pulled back, you can have a pretty good rally, and that's what we're looking at. So let me sum it up. I think that gold is in play in this phase because there are so many undecided factors. There are so many extraneous things that are coming together, whether it's battleships, whether it's rocket ship, whatever it is. We've got this period now that finally you're seeing the VIX rally and you're seeing the S&P and the Dow and the Qs start to pull back sharply in the semiconductors. That means that for me, that gold is probably going to be the safe haven. Look, the TLT you would think is a safe haven, and if I can just get it right here, the TLT rallying, just like gold is in leg E at this particular point. So all I can say is that if you're in the nugget, I don't know if you actually answered the question. My question was if you're just day trading or if this is a position play. If you're in a position play with JNUG, I think that it. Got to type it onto there. Okay, JNUG. It really needs to get some upside action and it needs to break above the candle of the 16th of March. Could do that by tomorrow. It certainly could at 8:09. It's at 7:26. That's actually a long way to go. But it isn't acting as well as it should. So I think my eye says that the GDX is probably better and a safer instrument to use. It doesn't have 3 times. It's just straight gold miners ETF. And it's a better vehicle. if you want to be along the gold. I'm just looking at this, and the way I'm looking at the dollar, and I've had questions about the currencies I'll go to right now. The dollar, the stochastic is at 89%, and the MACD is still good. I would not be surprised if the dollar kind of rebounds by Thursday or so. If at 100.70 right now, if the dollar can go to 100.35, then all of a sudden we're looking at something that's a little different. And this is also saying to me that J&J, I haven't looked at it for a while, GIS, which is right here, General Mills. All these, let's then look at Coca-Cola. Yeah. I was just trying to get a relationship of what I'm thinking of the dollar. So let me show you this. EUR-USD, the euro-dollar currency pair, nice bounce today, but within the context of the MACD, the MACD daily, it looks like this is a bounce, and it might have to retest the low. Stochastic is turning up, but when I'm looking at the weekly chart has still got that arch formation, and the weekly chart leads to the monthly chart, and that says we're above the left side low of importance way back in March of 2015 at 1.0461. We're above that, not way, we are above it, but we haven't really seen strength. And until the euro dollar can break above actually can go to 1.1, I think the dollar is actually still in play. I don't know if I actually answered the question. I'll be right back, and I'll try to define it.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, folks. Let me just redefine it here. So the euro dollar is bouncing. I still think it's only a bounce at this particular point. Good. Next thing is the USD JPY. Slumping. And that, let me just move this chart so you can see it nicely. Look at this, lower lows and lower highs. And the MACD is not showing any strength in the weekly chart at all. The daily said, whoa, it was so close to spiking to the upside. Look at that, the MACD was trying to turn around. The histogram was improving, then bam, today, down at 109.73, down 1.18, down 1%, over 1% in the dollar Japanese yen currency. Not good. Then if you want to look at, I just wanted to show you something else that I think is quite important, is that copper has made an arch formation. Remember, over and over and over, we see this arch formation in all the different sectors. And that's a failure pattern. So if high-grade copper starts to decline sharper than this, goes under 2.55 within a week and a half, 2 weeks, that's just not going to be good action at all, world economy-wise. So I'm just, right now, caution, I think, is, I've been saying this to subscribers for 2 weeks now. Caution is the watchword. We had not broken. We had used time rather than price. Even today, with all the noise that's going on, look at this. IWM, Russell 2000, it's just price, down 25 cents, but within the lower lows, lower highs pattern. What is very important here is if you look at the IYC, and the IYC is in fact the iShares US Consumer Services ETF, all-time high, leg C in the monthly. Weekly chart went to, I'm calling this an E for now. I don't see any reason why I shouldn't call it an E. Let's see. Yep. And in the daily chart, the IYC at 159.92, down 95 cents. This is what I call a Chapman wave. It isn't quite the pattern. It's the one that I love. It's called the double camel hump. Simply put, the stochastic makes an arch formation, and that takes you to a D, and then it pulls back, and then it rallies again, but only briefly goes above 80%, and then it falls back down. Now it's at 76% as the MACD tries to rally and turns around, and that leads to not a brand new peak A B, but this is an F/B. I didn't even put the B in. I think this is an F, and I think that the IYC is going to pull back deeper into the 158s at some point over the next week or two. That will impact the weekly chart. So let me just put this in the context of what we're looking at. The reason why I think holding some gold or gold stocks right now, I'd probably say the GLD is one of the better ones. If you want, you can go to the 1 to 10 smaller GLD if you want, the IAU. But what I'm looking at now, and this is really important for me, is that this is the first time that I got a sense over the last 2 months that the layperson was coming back into the market. And we know that that can be a problem because it usually signals that they say, okay, full steam ahead, I cannot watch this anymore, I've got to be involved. And that usually pertains to an overbought level being corrected as the new buyers get a little nervous. Let's go to Joe in Boston. Joe, how are you?
I'm well, Basil. How are you?
I'm very well, thank you.
Good. Yeah, I just wanted to check back in with you on the platinum we've talked about a couple of times. I saw it dropped yesterday, and it was looking like, it had pulled back, and I was curious what you thought if this is a bounce. I guess what I'm looking at is the chart to me looks pretty good on the daily, but on the weekly, I'm wondering if that's a longer-term ABC down.
Let me just do this, folks. We're looking at PPLT at 92.37. This is the ETFS physical platinum shares. I'm going to pull this chart out. This is the weekly chart. Joe and I were looking at this before. So, Joe, do you have any PPLT at all at this moment?
I do not. I've been looking at initiating a position. I think I called you the day of the Fed meeting.
Right.
We decided to hold off. It had the pop. It ran up about $3. Now it's pulled all the way back to below what it was the day of the Fed meeting yesterday, and now it's popped again. So it's
a little island reversal, but with metals and currencies, island reversals are kind of part of the game. So I tell you what I'm looking at here. This is a really good candle, but I'm not sure why platinum at this particular point should have a rally unless we are starting to see that the commodities themselves have become some kind of a play here. Remember, I spoke about the corrective moment where sectors that were very good take a breather and sectors that have been very poor start to rally. So we might be looking at a completely different scenario here where dormant commodities are starting to see some kind of buying. So let me do this. So it's up. So we're looking at PPLT trading at 92.38, up a really big $2.26, up 2.51%. I don't like these single moves to the upside that then fail and then start to continue that H pattern. But if you look at the weekly chart, a while back, I'd drawn in this rising channel, a little mini channel over here that I call the Chapman Wave Inside Track Buy Zone, Support Zone. And if that breaks, that's going to be really important. Breaking would mean that PPLT goes under 87. That would break it. So right now, it is right on the line that I drew. I never expected it to. It hit it twice. It hit it back in the week of the 17th of March, right at the low of 89.30. And then it touched it yesterday when it gapped down. And now it's gapped back up again at 89.70, a slightly higher low. So I'm going to make this suggestion. Because you've watched it so long, because it's lower than it was before, I'm going to suggest at 90.38 that you, and someone in the gen said, maybe this is a short squeeze. It doesn't matter what it is. A short squeeze, though, means that there isn't buying activity to keep supporting it. It just means that people are covering, and when they stop covering, it's going to come down. I'm not sure yet because the pattern with the histogram has been quite positive for a little while, even though the price has pulled back. So at 92.38, Joe, this is the first time I'm going to say to you, why don't you start a small position now and 92.38, but if you do that, give it a 91.55 is the 9-period exponential moving average. If it closes under 91.40, that's like a 1.1 risk that you're taking. I'm prepared to say to you, you know what, rising lows, and so far on a short-term scale, it's got rising highs. If that's the case, if we can take out 92.63, the high that was made on the 7th, that was 3 days ago, that'll be even better. So what I'm going to say to you is, Joe, this is the first time I'm going to say, start a position here. You don't have to get carried away. Just get a position. I was going to say a small position, but what I'm going to say is smaller than you would have done before. Just don't get carried away. That's all. Either on the small side or just a position. And I would put a stop in of 1 point. And I'll tell you why I'm saying that. If this is going to move, if it's going to replicate what we've seen before, that big candle of the 15th was followed by higher highs all the way to a peak C. Well, I'm prepared to take that risk there by saying at 92.38, if we can go to the 200-period moving average at 94.30, that's a nice gain. So start a little position or whatever it is that you want, put in a 1.25 point stop, and let me know in 2 days how it's going, okay?
All right, thanks, Basil.
Thank you very much for calling. I'll be right back.
It's that time of the year again, and that means the Spring Tiger Dollar Sale is back. TFNN has just announced that our best Tiger Dollar Sale of the year is back this week only. Right now, you can get up to a 50% bonus on whatever you spend on Tiger Dollars. Tiger Dollars can be used for any TFNN newsletter or service and are a great way to add extra savings to any TFNN product. Tiger Dollars never expire and are fully transferable. Whether you're a current subscriber or plan on purchasing anything in the future, this is a great time to get your Tiger Dollars. Remember, this sale ends Sunday and we're closed on Friday with the market, so don't delay. The Spring Tiger Dollar Sale with the potential to earn a 50% bonus on your purchase only comes around once a year, so don't let it pass you by. For all the details and to get your Tiger Dollars today, visit the front page of TFNN.com. TFNN.com. Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Hi, folks. Be back. So I was asking the day, could I look at the IYT, which is the iShares Transportation Index? Well, that was one of those that in the Chapman Wave, I typed in here, example, one of the quickest peak A to leg E possible in the Chapman Wave. Actually, there's 1 bar extra, but that's, again, I mean, look at this. There's the low. This is the IYT. Makes the low on the, at 158.18 on the 27th of March. Then it goes leg A, peak A, very next bar, leg B, next bar, peak B, next bar, leg C, peak C, next bar, leg D, peak D, and it holds for 1 more extra bar, tiny little candle there, and then it goes to E, and that said to me there should be a sharp pullback today, and there is a sharp pullback. The transportation index is down 1.42%, down 2.35 at 162.74. But I had another one, and it was an F. That is so unusual. Why did I not write it down? I can't believe it. All right. So in the meantime, back at the ranch, this is a great example. What I am going to do is there are a couple of questions, but I want to deal with the emails that I got. So GT had said a lot of put buying in applied materials. So I was discussing this with someone the other day, and they were saying applied materials is just not always very well organized. They don't always know what projections are for numbers and things like that for projections for their sales, etc. And yet some of the others are like Lamb Research. There are some that are just fabulous at what they do. So I'm looking at this and I'm saying, okay, Amit made a peak G, and that's why I looked at all of these. And Intel made a peak right here. The peak D turns around, pulls back sharply, and that's one of the reasons why I felt strongly that we were going to stick with trying to short the SMHs. We did have a short position, but instead we shorted it via the 3 times short position. We got a half position there, and that I think is going to work out for a little bit longer. I think that they are way overboard. They need to pull back. How much is a little? I'll only know at the end of the day. I'll get a sense of this candle, the breakdown candle, because the whole area between 76 and 75 should be very strong support. It should be. We'll see if it is going to be. So I'm watching that closely. So that's the question there for applied materials and semiconductor index. UAL is a question. Yeah, this is, I don't want to go into it. It's a complicated thing. UAL, United Airlines, it was just absolutely a dumb thing that they did. Can you imagine dragging anybody over? An innocent person just sitting there. I buy a ticket, I'm sitting there. Next thing I know, a lottery, you're out, boom. Well, what do they think this is? How dumb. Sometimes dumbness under the guise of administering policy is just all they had to do. Well, it doesn't matter. Anyway, URL right now down 2.86 at 68.66, down 4%. Made a very quick ABCD peak D, pulling back at D. Remember, what is a D? Hey, I keep talking about D. Some of you might be new here, so maybe I'll just quickly need to show you something. A peak D is right here, and if you subscribe to my service, you will see we talk about them all the time. I've got something in the way here. But this is what we're looking at. From the lowest, most identifiable low bar, merely count each successively higher peak. We label them alphabetically, peak A, peak B, peak C, peak D. They can go higher. I have a whole bunch of techniques from my CD introducing the Chapman Wave methodology. When you get to the seventh peak, peak G, a whole bunch of other things. I've got a whole chapter on what can happen at a peak G. But it can recycle and go higher. So D is where other things can happen. Well, look what happened. You got D, and other things are happening. Sharpest pullback you've seen at peak D, right? So what we're looking at is URL problem. So that's another reason why the IYT is probably pulling back. You've got the airlines pulling back. So the next question I had was XAL. I don't think I've even notated the XOL for a little while. Yeah, I haven't. So this is only A, B, and it failed at B, but the monthly chart, the weekly chart is in peak F, and making lower lows and lower highs. That's all I need to know. And there is a leg D in a peak D/B in the monthly. But what we're looking at this, and the XAL is actually holding not too badly, I must say. There's that trend line. I love these trend lines. Look at this. Chapman Wave falling axe formation can go for a while. We'll see. If the XAL starts to decline at 109.76 right now, if it takes out 107.75, somewhere around there, in the next a week from tomorrow, Wednesday a week, that'll say to me, finally, we've got all the little duckies, the IYT, the transportation index, the best sector was the airlines. Anybody traveled lately, you know that you squashed like little sardines there. So we're going to be watching this very closely here. And the other thing I was asked about is the XLF. Well, the XLF, look, this is the chart to keep your eye on. This is the 30-year T-bond yields, white. Brown, the 10-year T-note yield. This is the 5-year T-note yield in cyan. Look at this, making lower lows and lower highs, made the cup formation. Now, we have seen a pattern that's come about over the last 6 months or so, where even in the dollar, we did it over a year and a half, where you make a U-shaped pattern. You do hold kind of at the low without breaking down, and that sets you up for another U-shaped pattern. So it's a soft W. So that's going to be something very important to watch. And look at this. We broke below in the 10-year, and we broke below in the 5-year. This is a really important period. I don't think that the Fed is going to have the gumption to be able to push rates up right now. I think they might do it a little later on. At this particular point, what I'm looking at is that yields have been stuck, and I think going to be stuck in this range. And I've spoken about that for quite a while. The Japanization of our bond yields remains in place until we get to 3.5 or higher in the 30-year. You got a 3.5. There's something else going on. That's the end of the Japanization of our bond yields. So, and now look, you've got a peak, a leg E in wood, IW, the iShares, WOD, Global Timber and Forestry ETF, down 0.51 today. There's that leg E, but you failed to make a D or a G in the weekly chart of the HGX, the Philadelphia housing sector. This is a very important moment all around. I wanted to emphasize that. So now what I wanted to do is to go to the next question, which was So the XLF, the reason why I went to the yields is because the yields were rallying. You got the XLF rallying. When the yields, that's the S&P financials. Now they're not rallying, they're pulling back, and the XLF is pulling back quite sharp. I think the XLF has a little more to go. If you remember, we were looking at Goldman, and my contention was that Goldman, in the 218-ish area to the 212, where the 215 level for the 9-period moving averages, I think that might be a target. I could be completely wrong in this, but that's kind of what I would like to set up as maybe a potential buy. And that's really what I'm looking at. And I had a question about JP Morgan. If I recollect, Lou from New Hampshire had called, and I said, Lou, have patience. We want to see, and it was up in the 90s at the time. And I said, let's see what happens. Let's see if there's even a chance that you can see JP Morgan Chase trading at 85.14 down 74 cents right now, having made a high of 94, or did it just miss 94? 93.98 back on the 1st of March. Let's see if we can get into the low 80s, and then I would recommend buying a call. This question was on the call, if I recollect. So I'll be back. Basil Chapman, Take It Commissions Hour, Dow's down 98.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Learn how to trade options with swim lessons. Brought to you by TD Ameritrade. Think or swim. Next on TFNN.
So in this Chapman Wave methodology, remember I was showing this live, the JNUG. This is a DX Junior Gold Miners Bull 3 times. What I'd said is that you've got a left side, right side price time match, but it was not an exact mathematical formula. It was the candles that I always look for as the alternate to a left side, right side price time match of a trough, exact trough on the left side, or an arch ellipse right at the pivot point. So what we're looking at is there was a peak E doji right there at 10:30. at 7:30, pulls back to the low of 210 this morning, the 7th, whenever that was, at 6:48, and then this is the 10-minute chart, and then it rallies, makes an arch formation, successful arch formation, and it goes on to a C, D, E, and then what I said, I think that this is an E. We are very close to a turnaround. When I went to an F, I've put a down arrow, and now there should be this is a 10-minute chart, remember, there should be a pullback. So the pullback says it better hold at 720, it better hold 709, this moving average right here. So we've got that. And the next question was in the E-mini, what am I looking at? Is there a chance? What was the question JP asked? Basil, do you think the ES on a 10-minute has a better chance of hitting 2347? At this point, looks like peak B, 10 minutes to me, but then again, you know me in alphabet, not always correct. Yeah, I think that there's a chance to rally, but 2341 is the level that you need to watch for. It's right here at this moving average, which is the 9-period moving average right there. No, I'm sorry, this is the 9, this is the 18-period moving average. So, yeah, I think there could be a bit of a bounce. We've had a lot of selling pressure. Now it's this kind of loose lunchtime trying to bounce formation. I would just tell you that if there is a rally above 2,345.75 in the next 10, 15 minutes, be ready to see it take back the loss from 20 to 10 this morning from the 2351 level. That'll get you to 2347. So I'm looking at the arch. First, the arch. It has to break above that. Then let's see what happens. Okay. Next question I had. No, what I want you to do, because we're just about to go for a break. Folks, there's this fantastic sale going on right now. Go to the front page of TFNN. It's 50%, 25% off, or 50% off. It depends. If you are subscribers to any one of our services here at TFNN, check it out. I mean, this is a fantastic time to get a deal, a better deal than you would maybe even playing the market. So I'm going to just say to you, check out my opening call. Hopefully you will find it really beneficial in terms of overviews and what I look for, the big picture, etc., as well as what we're looking at in shorter term. And there have been some very nice gains on the percentage term, but the day's young. Anything can happen. So the USO is at 11.09. It's in leg D. It stopped dead at the 200-period moving average. The question was, is this a time to be buying or shorting? The Exxon moves, etc. Exxon right here is failed to make a peak C. Is this really a time for shorting? And I'm just going to say to you, I don't think I would be shorting the integrated oils just yet. We've got this whole thing going on in the Middle East. Anything can happen. So oil is still in play as maybe like gold is. So I'm thinking that these are little security blankets, areas that you might want to not be shorting. Maybe you don't even want to buy it, but you just don't want to be shorting them right now. So I'm just going to say to you, in a different circumstance, I'd say, yeah, Exxon probably is fading. We own Chevron. It's down. I'm not sure if we were taken out. I think we were taken out for about a 1-point loss, 108.06. I can't do it right now. I've got a really tight stop, less than 1%. Not prepared to mess around at all. We're in at 109.19. It's now at 108.56. No big deal, but I'm not going to mess around. And so all I'm saying is I don't know if I'd short it, but now I'm worried about. I think the upside might be limited. It just doesn't seem to get going here at all. So that's Chevron. Folks, have a great day. See you tomorrow. And happy Passover to those celebrating. And I'll be back tomorrow. Dow's down 93.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to the Gold Report, an $85 value, visit the front page of TFNN.com today.
This is TFNN.